Picture this. You wake up in 2025, check your bank account, and realize you're either sipping champagne on a private yacht or crying into a bowl of instant noodles. The difference? Whether you bet on real estate or stocks. Let's talk about which one could make you the hero or the cautionary tale of your financial future. Real estate. The tangible giant real estate. It's the investment you can touch, feel, and accidentally stub your toe on. But is it the golden goose it's cracked up to be? Let's break it down. In 2025, the real estate market is projected to be a mixed bag. On one hand, urbanization and population growth are driving demand for housing, especially in emerging markets. On the other hand, rising interest rates and inflation could make borrowing more expensive, squeezing potential profits. The beauty of real estate? It's a tangible asset. You can rent it out, live in it, or even turn it into an Airbnb empire. Plus, it's historically less volatile than stocks. But here's the catch. It's illiquid. Need cash fast? Good luck selling a property in a hurry without taking a hit. And let's not forget the hidden costs, property taxes, maintenance, and the occasional nightmare tenant who thinks security deposit is a suggestion, not a rule. Real estate can be a steady earner, but it's not for the faint of heart or the light of wallet. Stocks, the roller coaster ride. Now, let's talk stocks. The stock market is like a high-stakes poker game. Thrilling, unpredictable, and occasionally soul-crushing. But if you play your cards right, the rewards can be astronomical. In 2025, the stock market is expected to be shaped by tech advancements, geopolitical shifts, and the ever-looming specter of inflation. Companies in AI, renewable energy, and biotech are poised to dominate, but don't count out the old-school giants just yet. The upside? Stocks are liquid. You can buy and sell in seconds, making them perfect for those who like to stay nimble. Plus, with fractional shares and robo-advisors, you don't need to be Warren Buffett to get started. But here's the kicker: volatility. One tweet from a billionaire or a surprise interest rate hike can send your portfolio into a tailspin. And while diversification can help, it's no guarantee against market crashes. Remember 2008? Yeah, stocks don't. The showdown: returns and risks. So, which one wins in the returns department? Historically, stocks have outperformed real estate, with average annual returns of around 7 to 10% compared to real estate's 4 to 8%. But real estate offers something stocks can't: leverage. With a mortgage, you can control a massive asset with a relatively small down payment, amplifying your returns if the market goes up. But let's not sugarcoat it. Both come with risks. Real estate can tank if the economy falters or interest rates spike. Stocks can plummet if a company goes under or the market takes a nosedive. Diversification is key, but even then, there's no such thing as a sure bet. Future projections. Crystal ball time. Looking ahead to 2025, real estate could see steady growth in certain regions, especially as remote work continues to reshape where people live. But don't expect the explosive gains of the past decade. Stocks, on the other hand, could be a wild ride. Tech innovations and global economic shifts could create massive opportunities or massive losses. The key will be staying informed and adaptable. The verdict: so, which is the better investment in 2025? The answer depends on you. Are you a hands-on, patient investor who loves the idea of owning physical assets? Real estate might be your jam. Prefer flexibility and the potential for quick gains? Stocks could be your ticket. But here's the real secret: you don't have to choose. A balanced portfolio with both real estate and stocks can give you the best of both worlds: steady income and explosive growth potential. Just remember, no matter which path you choose, the only thing worse than losing money is not trying at all. So, what's it going to be? Bricks or bytes?